go ahead and start recording. So that way I have both. So a couple things. Let's start over on the home page. Get adjusted here. Let me get a drink. Let me get a drink. Good drink. Very good drink. Okay. So how did the markets go? Let's start with the Dow. The Dow finished negative 0.23% today. The NASDAQ finished a negative 1.57% today. The S&P 500 finished another negative 99%, 0.99%. Let's make sure I got all this formatted right, so that way I can keep track. Because formatting is key. And then the Russell, 2Ls, 2000 finished negative 0.81% today. So all in all, it's a pretty red day. Let's talk about the advance ANCE versus declines. I don't like the way that's formatted. Versus declines. So we had a 34.9% to 61.3%. So it looks like a lot more stocks were declining than advancing today. So it looks 3411 to 1939. So 3,400 stocks declined today rather than the 1,900 that were advancing today. Makes sense, with all four of the markets that we're looking at coming down. So, it just kind of coincides with what the markets are doing. New highs versus new lows, new loss. Let's get rid of that. I gotta stop saying so much whenever I speak. So we have a 36.8% new highs versus a 63.2% new lows. That comes out to 179 stocks had new highs today, 308 stocks had new lows today. Maybe that's stocks, maybe it's not. It would be this is across the NICE, the Nasdaq, and the Amex. It's not gonna let me click in there, but still, nonetheless, it's a good widget. I'm using this one right here. If I can highlight it properly, there it is. So we're talking about that one. We'll move to the SMA 50s and then the SMA 200s. So 60% of the stocks, 3,300 total, fell below the SMA 50 today. And then it's about 50-50 on the SMA 200s. Just kind of signaling that it's still pretty mixed whether things want to go up or down. The SMA 50 with a lot of stocks crossing below that doesn't really mean much in my opinion. If we dug in and we looked at some of the stocks, it won't let me. I'd have to pull up a screener, and I don't really feel like doing that at the moment. But there's definitely some interest inside of stocks going to the downside, at least on the SMA 50, which relatively it's a short-term thing. Let's talk about the bull and the bear percentages. It looks like 62% believe that the S&P 500. This is a pretty cool little widget, honestly. So the way that it's set up is where will the S&P 500 be in the next 5 minutes? You can click and vote to be a bull or a bear, and it looks like by the time the market closed today, there were 62% of people saying that the S&P 500 will be below and fall into a negative sentiment, and then about 38% of people were saying that it would be above and fall into a positive sentiment. So it just kind of backs up all of the data showing that things are moving to the downside, at least today. And then if you look at the daily chart, we can still see that relative volume was, I mean, just above average if you consider this 1.0 to be average. Doesn't look like things were super inflated, at least volume wise. But if we look at the time frame for today, we can see that stocks came up pretty high early in the morning. They started to flatten out around this 6860 area, and then near the end of the day in that 2 p.m. to 4 p.m. sort of, some would call power hour. This is about 2 hours here. We can see that the decline started to really take off there. It gained a lot of momentum. Same thing with the Russell. Not so much with the NASDAQ here. It looks like about that last hour, that's more so the power hour. People are rushing to get trades in, that things started to fall. And then on the Dow, there's an interesting point I'm about to bring up, but the Dow didn't really seem to take too much into consideration with the negative sentiment, although in the last hour it fell more, just in line with everything else. But the point that I wanted to make here was that if you look at all four of these charts, we can see that the Dow is the only one that closed higher than the open. So if we look here, we can see the open candles, call that, I don't know, 23.6, you know? Here, call that 68.40, 68.39 ish. And then we can call this one about 245. And then same thing here with about 47,400. So if we look, we can see that the Dow closed at 47,522, which is above the open here at the beginning of the day. We can see that the NASDAQ, the S&P, and the Russell 2000 all fell below their opening candles, which to me is a sign of more negative or bearish sentiment. Moving over really quick to some of the news, we have Amazon, which I want to bring up. Let's go back. I want to do this in a new tab. New tab. Beyond Meat is the first thing that popped up, and it tanked. A funny little point here is that there were people that I saw, like not necessarily Wall Street bets, but on Reddit inside of like r/options or any of those degen subreddits where they're more so talking about gambling rather than investing or trading with intention. And anyways, there were several people that I saw that were buying in right here around the $7 mark. And if you see, I mean, man, I hope they're okay, because price is now at 166. They have lost way more than half, almost, what is that, like 80, almost 90% of their initial value, which, if you ask me, is not very good at all. It was just a poor investment, and it was all into the hype. Now, talk about Amazon. It's not going to give me what I want there. Let's go here, here. There we go. So, shout out to FinViz. If you guys haven't used it, I love using it. I did the paid subscription for a while. It gives you real-time data. Something in my eye here. When you have the paid version of this, it gives you real-time data. But if you don't have the paid version, the data is delayed like 15 minutes. It's really not anything crazy. But I really like this site. They recently introduced this, and this is kind of my talking points here, but Amazon, they reported earnings today, and it seems like they had a major revenue beat. I don't know why it's not showing here. Does it show down in here? Quarterly, 6/30, 2025. Total revenue, 167. Yeah, that's interesting that they don't have it shown there. Anyways, they reported Q3 earnings. They beat revenues. Um, they shares were higher. Oh, hold on. It won't let me zoom out. But seems like price is sitting at 253 when we closed at 222. So there's a $30 jump, which explains this sentence here. A lot of investors are focusing on the AWS, Amazon Web Services growth. It's interesting that shares went so high, considering that there was this layoff news, and then Monday there was more, if you call it that, just more layoff news on the Amazon company. Let's write this down really quick. Major revenue beat. Investor focus on AWS growth. Shares move about 13% higher after hours. Um, this comes amidst several thousand, honestly, job cuts. So they have this news too that I'm going to get to in a minute, but more on topic of these job cuts. So there were the 14,000 job cuts. What was this, yesterday or Tuesday? And then on Monday, there were about 30,000 more job cuts at Amazon announced. And they have something like 1.55 million employees. So it's not like it's going to extremes or they're taking drastic measures to lay off employees. But an interesting note is that they're not the only one doing job cuts. UPS announced several thousand job cuts as well. And on top of this 14,000 job cuts, from what I've looked into and what I'm picking up on, is that a lot of these job cuts are falling into the Amazon game studios. So, an interesting note, I mean, almost following this news exactly, was that a popular game that was made by Amazon's game studios, New World, the announcement came, I don't know, a week, roughly about a week after they, New World, they announced a new DLC for the game. So a lot of new content for the game, almost changing the way players are playing New World, because for quite a while there was just a lack of interest in the player base. I mean, the core fan base was always the core fan base and they were playing it no matter what, but there was a lack of content. Things were kind of dry. Nobody really knew what to do anymore because, they were either maxed out or there just wasn't enough players to really get things going. And so they released all of this new content. It was new areas, new weapons, new gear, new things to do, and it sort of revived the player base. There was a lot of people that I was paying attention to, at least streaming wise, in that industry, that were really grinding New World, and I've heard a lot of really good things about it. But this job cut news comes out, and then almost immediately after that, it was all this week actually. Amazon Game Studios announces that they are going to stop all content updates for New World. They are going to stop working on New World, and almost every game developer that was working on New World is now moved on, fired, let go, whatever you want to call it. They're just not there anymore. So it's interesting news to see that not only is Amazon restructuring and they're doing layoffs, but they're this restructuring is putting them in a position to refocus what they're actually trying to do, which is really interesting because what are they trying to do? Are they going all in with this AI um, fantasy? I don't know if you call it a fantasy. I'd call it a fanatic craze right now because it seems like every company and their dog is getting in on AI and trying to work some deal or the other. And it seems that every company that brings up, mentions, cuts a deal, or starts a new project that just involves AI, they almost skyrocket. And I mean, there's plenty of examples of that. You take Oracle, for example, you can take Palantir, you can take Intel. I mean, Amazon is one of them, Nvidia, Microsoft, Google, OpenAI. I mean, it's crazy that all of these companies, and hell, even Nokia is a part of this AI craze. And if you don't know now, you know because you should know. I mean, there's a lot of people that I'm talking to that say this reminds them. They're older than I am, more experienced than I am, but they're saying that this reminds them a lot of the dot com bubble when that was a thing. I wasn't around for that, at least in the markets. I was a kid. So all I know is what is written and what I can research. So is this the same thing? I doubt it. Does it rhyme? Probably. And so that's just something to be aware of, to keep in mind, and to take note of whenever you're looking at your portfolio, you're looking to invest, or you are just taking interest in the markets. Like this is something that could pop and it could send stocks, send the market even into a free fall. And it's scary. It's not really meant to be, a bearish sentiment or I'm trying to preach fear or anything like that. But it is something to keep in mind. You should definitely be aware of it and you should know what's going on. Now, back to Amazon. They have this new Trianium chip. I don't know a whole lot about it. This is all going for AI and cloud strategy, and this cloud strategy kind of goes right back into this whole AWS growth, the Amazon Web Services, and this is pretty cool. Project Rainier. I was looking at this earlier, and let's pull this up and let's pull this up because we'll get two different perspectives here. So this is an AI cluster. This is a data center for AI. And that is just another thing that is going into this entire AI bubble, this AI craze, or just season. It's AI season, and it is what it is. Um, this is Anthropic AI, which I think is Amazon owned. I don't quite know, but they're going to build and deploy industry leading AI model Claude. And then that's going to use more than 1 million of these Trianium 2 chips, end of 2025. So they have 2 months to get all of this set up and working and going. And apparently it's fully operational less than a year after it was announced. So that, I mean, they went full force into this thing. It's crazy, 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 crazy. There's definitely a lot of interest on my end from seeing how this plays out. And then Oh, okay. So that's just going to take us to another website, which is probably more or less what this is. Um, so this is okay, cool. This is named after Mount Rainier, which is in Washington State. It's in Washington State, also known as Tahoma. It's a stratovolcano. That's kind of neat. It reaches the stratosphere and it's a volcano. Neato Gordo. Anyways, um, it's monumental. It's talking about all of these chips. It is custom designed, training artificial intelligence systems. It's so these are basically like super chips. They're meant for processing enormous amount of data. It's AI chips, man. This is the game that we're in now, and the industry is full steam ahead with it. Um, Bandwidth and networking, accelerating machine learning and reducing cost barriers to AI accessibility. That's interesting. Sustainability. Look at that picture. Dude, that's all for AI. And that's crazy. I mean, it's cool, but that's crazy. This kind of looks like the storage center that you would drop in Battlefield. Nuclear power, battery storage, renewable energy. Oh, they've been the largest purchaser of renewable energy. Anyways, we could sit in that for a while, but I don't want to take up a ton of time. Um, Heavy interest in AI chip processing, development, um, machine learning, data efficiency. Hope I spelled efficiency right. And industry growth in the AI field. We can talk about Apple next because they reported earnings. Let's see. Let's see. So, Apple, they're at 279. Not as much as Amazon, but it's about to be expected. I mean, Amazon or Apple for a while now hasn't been doing phenomenal in comparison to some of its other tech leaders, but iPhone still sales still remain strong. Uh, they beat Q4 estimates, $102.5 billion revenues, 101 point, not 185, but a 1.85 earnings per share. They announced a 26-cent dividend, which is about in line with the last three payments. It's up 1 cent from the beginning of the year, but it's up 1 cent from last year. Call it that. So it's not too crazy. They're still maintaining a pretty solid dividend going into it. They did miss iPhone and China sale forecasts due to supply chain issues. That's kind of interesting. I wonder what's going on exactly with the supply chain. Um, Tim Cook, he guides for double digit iPhones revenue growth, 10 to 12% overall growth in the holiday quarter, and then warns of higher tariff expenses next quarter, sending shares higher. Yeah, a lot of companies are reporting this higher tariff expenses, and that kind of comes down to Trump and is it Xing Chi? I don't know how to pronounce his name, but there's a lot riding on that. Um, I'll talk about Meta here in a second. I know that the US and China trade tensions, there's a lot of talks today about it. It didn't seem like anything too crazy happened with that because there wasn't a whole lot of news surrounding it. So I'm sure I'm sure that talks are going in a positive direction. At least that's what that article down there said. So easy enough, simple enough to follow. We'll talk about Meta. Um, Revenue beats, EPS beats, iPhone sales are lower here and in China due to supply chain issues. Um, Forecast for higher sales growth during holidays and expected higher tariff costs, expenses in the next quarter. Shares move higher to about 279. 279 during after hours trading, which is about 8%. So those two guys reported. Meta, they're not doing good. They reported earnings last night, 12% down. They were 11% on the day today. Looks like they're coming back up a little bit after hours, but they're falling pretty hard. They missed on Q3 earnings. Yeah, they had this like $16 billion tax charge, and that was because of the One Big Beautiful Bill Act. It was something to do, I don't know all of the fine details on it, but there was something to do there with the tax changes on sales and revenues. So, they unfortunately had to bite the bullet and pay $16 billion in taxes. Hope I never have to pay that. Um, they have higher planned AI spending. It's just about everybody else. Guidance is about as expected. They have a $30 billion bond sale that brought in about $125 billion in orders. They raised their 2025 capital expenditure guidance to about 72 billion or greater. Um, they're falling in line with everybody else and warning higher 2026 expenses. And then a lot of analysts are downgrading and making price target cuts um, over capital expenditures and revenue uncertainty. So, once again, everybody's moving into the AI game. It's just how she goes. It is what it is. I'm going to talk real quickly about some of the tickers that I have interest in aside from the earnings plays. We'll talk about KView. We'll talk about NEG. Then I want to look at SoFi because those are a couple that I've been following. So KView, KenView Inc. If you don't know, in short, like one sentence, they're household personal products, but this company is really known for Tylenol. Simple as that. They got hit pretty hard around September when government officials came out trying to link Tylenol to autism. And for me, it was a good time to get in. I've been selling covered calls against this ticker for a while now, and it's nothing crazy. It's just that the volatility is elevated right now, so there's some pretty good premiums that I'm getting off of this, and it's just something that I'm sticking around in until it, rides back up. Because I mean, usually sits in this 22 range, 24 range. I mean, I have the shares. If they get called away selling covered calls, so be it. I may move into something else, but this is where I'm at for the time being. Now, they are sitting around this 14.28 mark. They've been sitting around 15.14 for quite a while now. At least in my opinion, this RSI and this MFI, they're pointing to further downwards movement, which for me is good when I'm selling calls. But what is not good is the stock is moving lower. And with the MFI pointing downwards like that, it shows to me that there's a lot of negative sentiment that is growing and there's momentum in this. And then with the RSI nearing this 30 level, we could be seeing something like this around September or October with it being oversold. And that could provide some reason to start looking towards the positive side of things and a soon ish upwards move. Um, Newegg, they have had a hell of a week this week. They finished up at 81. They're moving lower around 77 after hours. RSI, MFI, they're both pointing upwards. We're kind of in this overbought range. I don't really take a whole lot of interest into the RSI until it starts hitting 80 for oversold. I just like the 70 number to show me a bit of a warning sign. It's a bit of an orange flag to see when price is moving too high uh, in short. And so the MFI, with it pointing upwards like this, it's building. You can see down here, it's around the 72 mark. There's a lot of interest there. If we look at volume here, we have 3 days of increasing volume. So we have 1.88 million today. We have 1.57 million yesterday, and then we have 770,000 volume these last 3 days. And so for me, three's pattern. There's something going on there. We could be seeing higher moves with Newegg. Will we see this 140 mark? I don't know. I hope so. That'd be great. But otherwise, we're just seeing some more positive pressure moving with this stock. We have the 20 SMA, this nice purple line right here. It's a little hard to see over at the end, but this little purple line, the 20 SMA, is moving up and it has officially crossed over the 50 moving average. And that is yet another, for me, a positive sign that price is moving upwards and we're looking at a bit of a bullish ride here. So, Newegg, little positive, good news for them. They've had a rough time, especially after this drop. Bit of a short squeeze there. So, good to see. SoFi, we're looking at fintech. It's about all it is. It's just another financial stock that I'm looking at. It's been moving up quite well. It hit 32 this week, yesterday. It's moving lower, 29 today, 29.54 after hours, but we're falling right back into the midpoint of the RSI and then the MFI, money flow index. It's still showing some positive sentiment climbing towards this 70 number, climbing towards 80. We can still see this sloping line going up. So there's some positive momentum going this way. The RSI, there's a bit of a negative momentum coming down. So we're a bit of a standstill. We'll see what tomorrow holds and see how SoFi wants to play things. But all in all, it was an interesting day for the markets. We had the Fed speech yesterday. They cut out another 25 basis points on rates. Mortgage rates went up by about 20 points today, 20 basis points. So we're at a weird time in the markets. Things seem to be going higher every day with this AI news, but also we are still seeing some pretty significant moves lower. Um, there's money to be made. You just got to figure out what it is that you're trying to accomplish, figure out what type of market mechanism that profits you the most. And hey, as always, If you didn't lose any money today, you made money. Catch you guys later. See ya.